everybody. So my name is Jack. Today I'm gonna talk to you five stock investing rules for beginners. Right, everyone else. So those are the rules that I learned from famous investors like Warren Buffett, Peter Lynch, and also the first principle philosophy from Elon Musk. So using the I stuck with those. It's actually four rules, not five. Four rules of investing that the beginner investors should know. Okay, so I start with those four rules when I pick a stock that I want to invest. So as an example, I'll put it right here. I use the same four rules. I pick Snapchat and right now it's up over 123%. I also pick C Limited. Now it's up over 188%. And Carvana up over 148%. So I think those rules, by using those rules, and my portfolio is doing pretty well. Overall, it's up over 50% this year. Okay, so now let's go over the rule. The first rule is always invest in a company where the CEO has a big stake in the company. So the CEO is with the shareholder. If CEO goes down, the shareholder if the shareholder goes down, let me rephrase that. Now, if the shareholder goes down, the CEO goes down with him. So you have to check. You can check. I go to rocketfinancial.com and click insider, and you can see recent filing of the CEO and see if I will prefer if the CEO has at least probably 10% owns 10% of the company, or he's the founder and also owns more than 5 or 10%. You can invest on stocks where the CEO only owns a little bit, but those are very rare cases that I do invest on those kind of stock. But I would actually prefer a stock where the CEO owns majority stake. For example, Elon Musk owns more than 10% of Tesla. Square owns more than 10% of let me rephrase that. Jack Dorsey owns more than 10% of Square. Snapchat CEO Evan Spiegel owns more than 10% of Snap, and the list goes on and on and on. So that's the first rule. So the second rule is understand how are they going to grow their business, for example, from 1 billion to 2 billion. So my investing philosophy is growth investing. So when the company grow, the market when a company revenue grows, the market cap of the company will also grow to fit in of the valuation. So that second rule is basically uh, understand the growth. How are they gonna grow from 1 billion to 2 billion? So let's say Snapchat, for example. So Snapchat, when I invest, they only have 180 daily active users, but how are they gonna grow? Now, my ideology behind Snapchat is Snapchat is kind of like a messaging app. So if I got onto it, so if I text my friend, so my friend will go into it. So I add another person to it. So that's a growth. So for example, it will at least grow to 200 million daily active users. So as more people get on, it's like a domino effect, and more people will add, log into Snapchat in the daily active user flow. So that's how to they grow their revenue in the future. So that's why I invest in Snapchat. So That's a little example of the rule number two. Understand how they're gonna grow from revenue, grow their revenue. For example, like 1 billion to 2 billion or 10 billion to 20 billion. Hopefully you understand that. That's rule number three. And the rule number that's rule number two. Excuse me. Then rule number three is understand a company had one important thing to look at is understand the company debt structure and how much cash they have in hand. So you don't want to buy a company that only have like $5 or $6 billion cash on hand and $30 billion in debt. That is very kind of pretty risky to betting too much. But like but you have to at least understand the debt level and cash level. You don't want to pick a company that has huge amount of debt and it will almost guarantee to go bankrupt. Excuse me. Almost guaranteed to go bankrupt in the like for example in 2008 recession if the balance sheet is not very strong. But rule number three, you can go a little bit more lenient on it as long as you think their cash and their balance sheet can withhold the recession or that if the business going south, they can like fund it themselves without going bankrupt. It's a big fun. But rule number three actually is it's kind of important, but not important as rule number one and number two. Because rule number one is talk about CEO owns more than 10% of the company. So if the company goes bankrupt, the CEO goes down with shareholder as well. So that's basically rule number three. And the last rule I use is uh, pick a company that has product or service that you are interested in and understand. So for example, I use Snapchat. So I'm interested on it and want to find out more about their AR features, lab spectacles. So it's a very interesting company and that's why I want that company. So if I pick another biometric company, I have no interest on it. So why will I then how will I keep up with the news and research with them and release new product? I won't even understand it. So so like for example the biology like medical stocks I won't even touch it because I'm not even interested on it or understand the product and the stock. But Snapchat I have very much interested because I use it and I understand it and, Snapchat fits all the rules that I just described. Number one is more than 10%, which even Spiegel does. Number two, and I understand the growth. I vision how you're gonna grow from how they're gonna double their revenue. And number three is Snapchat's balance sheet is pretty strong. And number four, I understand the product. So that's basically the four very important rules that I go by when it comes to pick a stock I want to invest. So if you think this is a pretty good video, please don't forget to give me a like and subscribe. And I'll make a lot of videos about financial stuff and I just bank and stock videos and everything else. So please don't forget to subscribe and give me a like.